Well, good morning and welcome to this webinar. Ken Spencer from HR Service, Inc. will be presenting on behalf and in support of the Credit Union Employee Healthcare Pool Board of Directors in partnership with Encore Benefits and Keith Corden. We appreciate you making time for us this morning, and as Ken works through this, you will have the opportunity to submit questions on the web portal, which he will be able to review and address at the appropriate time in the presentation. At the end, there will be a brief question and answer session, which you will be able to submit questions there as well on things outside of the 1094 and 1095 requirements. We know the Affordable Care Act is a moving target for all of us. All of you HR directors are in a position to constantly monitor and update your compliance and regulation efforts. So we want to thank each of you for attending this. For those of you that are attending that are already part of the Credit Union Employee Healthcare Pool, a special thanks to you for renewing, and you're entering your 10th year. We're very proud of its results and its history. We have never lost a credit union out of the pool with the exception of a merger or liquidation. I think it would be difficult to find any other pool that can say that. In addition to that, our average renewals are under 7%. With 20% of the time we actually have a negative renewal rate. 20% of the time we actually have paid a dividend premium refund back to credit unions. And I will say 20% of the time we've had double-digit increase. But overall, we're very, very pleased with that. Keith Corden and myself, Gary Lee Fisher, we are here to service you. But again, on behalf of the Credit Union Employee Healthcare Pool Board of Directors, we bring you this added benefit aisle, which is part of many things that are coming your way. And thank you very much. So Ken Spencer, I will turn it over to you, okay?
Great. Thank you, Gary Lee, and thank you everyone for joining us here today. We appreciate the opportunity to help you better understand the Affordable Health Care reporting requirements. This is a bit of a challenge. It's new ground for all of us, and we hope that by the end of our discussion today that you'll be more comfortable in what you need to track and how you need to complete these reports. We'll discuss at the very end some of the kinds of options, whether you're going to do the reporting yourself, or if you want to look into there are other entities that will help you or will do the reporting for you, and we'll talk about some of those options towards the end of our discussion. So we have the Department of Parks and Recreation. We've got the Department of Motor Vehicles. Well, there's a new department called the Department of Stressing about the ACA reporting requirements. All of us are stressed about this. This is really a big, it's new ground. It's a bit complicated, when you dive into filling out the form and the kind of information we have to track. And so as I mentioned, we want to make this more comfortable and easier for you is our objective here today. Okay, so let's talk first about which employers must report, who has to report. A lot of you may be on kind of the borderline about whether you even have to report this year or not. So we'll go through that. We'll also talk about the calculations of determining if you're an applicable large employer and such. So any organization that has 50 or more full-time or full-time equivalent employees, you have to, and you're on a fully insured health plan, you would have to report using the report on the ACA reporting requirements. Also, anyone who has a self-funded plan, and talking with Gary Lee and Keith, my understanding is a lot of you are on a partially self-funded plan, and so regardless of your size, if you're on a self-funded plan, it doesn't matter whether you're a group of 49 or 10. If you're on a self-funded plan, you will be doing the reporting as well. Interesting, this time they've actually included government and nonprofit organizations. A lot of time the government will pass some laws and leave themselves out of it. This year they've left themselves in. All right, so why must we report? Why are we even doing this? We kind of step back and say, okay, if I'm the IRS and the governing bodies of this, I need to know that everyone who's required to participate is participating, and so we have the mandate laws that are in place, so all individuals are required to have coverage, and then if you're an applicable large employer, meaning you have 50 or more, then you are required to be offering coverage to people. And so this is their opportunity to look back and say, okay, who's missing coverage? And they'll assign fines accordingly to individuals or to groups. It's also their ability to look to see who has premium tax credits. Okay, now I've had a question come over, and I'll stop periodically to address questions as we go, so that we capture questions while they're on your minds. So feel free to send them over as we go. The question says, would we use the look back window to determine full-time equivalent? We will hit 50 full-time equivalents in November, but look back, we will be under for the year. And I'm going to actually go through an example of that for you now. So this is a good segue to say, am I an applicable large employer? And I'll actually show you how you do the look back and how we do those calculations. So you look back over the past calendar year. So we're looking back right now. We look at 2014 calendar year, not your plan year, your calendar year. And so if I look at that calendar year and I count the employees there, I determine employees, in that previous year, anyone who averaged 30 hours or more, or 130 hours per month, and then I look at my full-time equivalents. I add the full-time employees to the full-time equivalents, and the full-time equivalents, I take the total hours of service and I divide that by 120, and that gives me the full-time equivalent example. I think, and hours of service include paid time off, vacation, and holidays as well. And it also includes seasonal workers. Let me go in and actually show you an example of this. So here's an example of an organization. They went through, they've got their calendar months across the top. They did their calculations. They determined anyone who worked 30 hours or more, they're full-time employees over each month. So they've got 48, 45, 47, and so on. Now they went down here and they says, okay, now I'm looking at my variable hour employees. I've got seasonal workers. I've got some people that were part-time. And now they've looked at and said, okay, what's the full-time equivalent calculation? So we took the total work hours for each of the employees. In this case here, they just demonstrated 3. So they had one that had 120, 160, 70. I add up those total hours. I divide by 120, and that gives me now the full-time equivalent for each of those months. So I've got 2.08, 2.28, and so on. So now if I take, so you can see I've got that clear across here. So now I look at my employer size, and I add up my full-time employees and my full-time equivalent, and now that gives me my total size along the bottom here. Now if I take and if I add up every month of employees and I divide by 12, that gives me, am I an applicable large employer or not? In this case here, they've got 50.45, and they are an applicable large employer. And so, so this, again, this just gives you a diagram to help you kind of understand, am I an applicable large employer? If you're an applicable large employer, you not only do you have to do the reporting, but you also have to offer coverage. Now, we had a safe harbor for this year where they weren't requiring it for groups 50 to 99. That goes away now in 2016. But I don't think that's an issue for most of you anyway. You've been providing coverage. Before I dive into more on the actual reporting requirements, there's something I want to make sure everyone understands. There's what's called measurement periods, stability periods, and administrative periods. And as the HR folks or the benefit administrators, we need to make sure we've got this down. We can't make mistakes in any of these areas or we create risk to the organization. So I want to make sure you've got these down. So let's talk about measurement periods. So the measurement period, this is how I determine who's eligible to participate in coverage. Now, if I have a new hire, a new employee, and I bring them on board, and I know they're going to be full-time, it's designated as a full-time position, then I'm just going to follow my normal waiting period. It's probably the first of the month following 30 days or 60 days, and I put them on coverage. No question mark there. But my variable hour employees, those that are designated to be seasonal, part-time, those individuals, now I look at them and I have to use what's called a measurement period to determine if they're eligible or not. In the measurement periods, there's a monthly option where you could re-look at it every month and take people on and off. That one's probably a real administrative nightmare if you're going to try and do it that way. Most are using a look-back method where you look back over the past. You can have a 3-month, a 90-day, a 6-month, or a 12-month measurement period. I'm going to use a 12-month measurement period for sake of our discussion here. Now, so I choose the measurement period, and then I need to consistently follow that. And then I use that measurement period to look at and monitor who's eligible. And I may have times throughout the year, I may have to look at this every month to decide, did someone else new become eligible to participate? Now, there's what's also called the stability periods. The stability period is the amount of time that they're able, once they're eligible, that they come on the plan, and they're eligible to stay on the plan, unless they terminate employment or have some qualifying event where they're no longer covered. Now, that stability period has to be at least 6 months, or the equivalent of what your measurement period is. So I'm using an example saying I have a measurement period of 12 months. My stability period then would be 12 months. So that means even if their number of hours change, and they go from to part-time, they're still eligible to stay on the plan over that full 12 months. And then there's what's called an administrative period. The administrative period is the time frame that I have as the administrator of the plan, benefit administrator, HR person, where I can step back, get the forms and documents, I can do my calculations, I can get them on the plan. The administrative period plus the measurement period can't be more than 13 months if, for new hires. So if I'm bringing someone on, I've used the 12-month measurement period, my administrative period would be 30 days. In most cases, 30 days is plenty of time to work through those details and getting somebody on a plan. I've seen some where they may have, you can change your administrative period for other ongoing employees. If you want to change that to a 60-day, it can be a little more than 13 months then. Anyway, that was a quick overview of these important calculations. Just wanted to make sure we're all clear on that. With that, let's dive into more on the ACA reporting. Okay, so what is ACA reporting? In essence, I'm filing required information to the IRS, and I'm giving copies to employees. So if you think about it, and you'll hear me make this comparison several times throughout our discussion today, it's kind of like when we give our W-2s at the end of the year. We'll give the W-2, we give a copy to employees, and we send a copy to the IRS, and there's usually a cover sheet, thing that'll go with it. You'll see this is a very similar process that we're going to go through here. All right, so now we're already kind of nearing the end of the year here, and so we can't wait anymore on this. If you haven't already started gathering the kind of data and such that you're going to need, or you don't have systems in place, you're going to need to make sure that you're doing that. Some of the kind of data that you're needing here. Now, by the way, we have 2 new sections now. Sections of the IRS code. There's section 6055 that deals with the minimum essential coverage, and I've got 6056, which is the employer responsibilities. And the kind of information that I need to gather, I need to make sure I've got some basic information: the employer name, address, EIN, calendar year. That's all going to go on the documents, and you'll see we're going to bring up the document here in a moment. Contact person, phone number. I need to show that I offered full-time and dependents the opportunity to enroll in minimum essential coverage. Now, the dependents in this case here, I could set it up to where I don't include the spouse. Most don't. I mean, most are including the spouse and making it available to everyone, but then just clarifying that definition. Also, I need to be able to demonstrate the months that coverage was available, the premium share. So each full-time employee's share of the lowest cost of the monthly premium for the self-only plan. So I need to be able to show that as well. Number of full-time employees during each month. I'm hoping that a lot of you have these kinds of database systems in place to where you can track this information and see it ongoing, or your payroll company may have a lot of this information as well. Name, address, taxpayer ID, additional information. Now there's various codes that you'll see that we go through where we fill out some of the key sections inside the documents, and I'll show you, and we'll go through those together. Okay, let's talk about the forms themselves for a moment. So there's a number of forms. There's 1094A, 1095, 1090. Well, actually, there's A, B's, and C's. Now, any organization that has 50 or more full-time employees, or whether it's on a fully insured or a self-insured plan, you're going to use 1095C and 1094C to complete your documents. If your size of group is smaller than 50, but you're on a self-funded plan, then you're going to use 1095B and 1094B to submit in. And we're going to go into details on these forms. And then there's what's called a transmittal form, which is the 1094s. You know, so the 1094 document is actually what you would submit in, where you then attach copies of each of the other documents that have been sent in to participants. Okay, so who gets the 1095C? Anyone who is full-time for 1 month or more during the calendar year. You know, anyone who is a COBRA participant, maybe retirees, if you've got any of those kinds of situations, they're each going to need to get a 1095C or 1094C, or I'm sorry, 1095B if you have less than 50 employees and you're going to have a fully or a self-funded plan. Let's go into the documents now themselves. So if I look at, before I go back to that, I just had another question that came over before we go into that. Do you list a full-time employee if they only worked 1 hour? You know, so if a full-time employee, actually I'm going to go back to the definition. Anyone who is full-time for 1 month or more during the calendar year. So 1 hour would not be one month or more. So you would not have to do it for just 1 hour. You know, so if they were there for a month or more. Okay. How do we know who is on COBRA? So most of you, anytime somebody's had a qualifying event and where they've terminated employment or they're no longer eligibly on the plan, you'll know that then. And you should know that they're on COBRA because you're responsible in managing the COBRA. If you have someone who's had some event, like maybe a dependent that is no longer eligible to be on the plan, and they've gone, or a divorce, we give them the initial COBRA notice, putting the responsibility on them to notify you that somebody is on COBRA. So hopefully you'll know because they've notified you, or you know because you're administering it. Okay, let's dive into the details on the document itself. So if I'm on, this is 1095C, this is the form I'm filling out that I'm going to give a copy to each employee. Now I'm assuming here that I'm a group of 50 or more full-time equivalent. So now as I go through this, let's look at some of the sections here. So if I look at Part 1, the employee information 1 through, let's see, actually 1 through 6. It's all just details about the employee, their name, social security number, and such. If I come over to 7 through 13, this is specific information about your organization, the employer, that goes on here. The more complicated part of 1095C is dealing with Part 2. So in Part 2, now I have to go into, and I look at 14, 15, and 16. And these are areas where it says offer of coverage, enter the required code, employer share of lowest cost premium, applicable section 4980H. You know, so I've got these different issues here, and I'm gonna bring up, and we'll go into details on more details on each of these sections because this is the more complicated part of filling out this document. Now you'll notice in here, you know that I've put 1A under all 12 on all 12 months. If I'm doing what's called an offer, a qualifying offer, I could put 1A in that section there. So let's go through that for just a moment here. So if I say so these are the codes for Part 2 of 14. And these are the codes that describe the coverage offered. So if I'm looking at a qualifying offer, that means I'm providing minimum essential coverage, providing the minimum value and I'm offering it to full-time employees with the employee contribution for self-coverage equal to or less than 9.5%. And I'm making this available to spouse and dependents. Now, if that's your goal, that you're going to provide that to everyone, that's filling this out a little bit easier, doesn't it? Because now all of a sudden I've got 1A, and I think in a lot of cases we are trying to, we're trying to meet the minimum essential coverage. We're trying to make sure it's meeting the value requirements, and that we're meeting the minimum value or the minimum cost. And so if you're doing that and it's offered to everyone, then back here in 14, I can just put 1A and I've covered for the whole month. But I may have some months where they weren't covered or they didn't have an offer of coverage, and so then that would change what I'm offering. So now so I have to look at these other codes. 1B, minimum essential coverage providing minimum value to employee only. So if you have an employee only plan and you're not making it available to spouse and dependents, then you would put 1B in that section there. Now again, just to emphasize the requirement, if you have 50 or more and you're an applicable large employer, you have to offer it to the employee and to dependents, excluding the spouse. Most are including the spouse, but you have that option there. So that wouldn't work, if that falls for your size of group. I'm not going to read each of these, but I wanted to make sure you had a feel for how you fill that out. So if there was no offer of coverage, then I would put 1H. If there's a, so again, you read each of the categories, and then you put that in, and if it's not the same for all months, then you would go in and fill it out for each month, what the code would be for that given month. Okay, and then you do the same for the others down below here. Now, so if I go on to 15, now I only complete 15 if I use 1B, 1C, 1D, or 1E. So if I go back to look at these others, the B, C, D, and E, now all of a sudden I can, I get a feel for. Now I would have had to have actually entered in some information there, because if I'm doing a qualifying offer, sorry, I went the wrong direction here. There's the 1B, C, and D. So if I'm doing a qualifying offer, then I don't even have to fill out 15 if that's for this employee and I meet that requirement. I don't have to fill that out. But if I did not, then I actually have to enter the amount of the employee's share of the lowest cost of the monthly premium for self-only. And and so then I have some calculations that I would enter back into this section here. And if that changed for every month, then I'd enter in that amount for every month. Shouldn't change if it's the same amount for all months, and I put it in there. But again, I may have some months where no coverage was offered, and then I put it in for the months where the coverage was offered. So you can see the complication of this this form here. Now if I go to 16, 16 is for each calendar month, enter the applicable code. So let's just read through a couple of these. So here's now the employee not employed during the month. So if they weren't employed for that month, it would be 2A. Employee not a full-time employee. So if they weren't full-time during that time period, that'd be 2B. The employee not enrolled in coverage offered. Employee in a section 4980H limited non-assessment period. So I may have somebody who's in my, so what this LNAP is, that's like they're under your measurement period. So they're in a measurement period time frame where they're not eligible for coverage because you're measuring to determine if they are eligible, so then you would put in 2D. Again, this is where it gets a little bit complicated. Once somebody, you'll find out that most of your employees, you're going to be able to go in here and put a 1A, and then there won't be anything that you have to worry about putting in for 15. And then 16 is going to be, an easy to put in because you've offered them coverage. Okay, let's go over to 1094C now. So again, that first document, that's the one that you would fill out. You give to each of the employees, and you'll also keep a copy, and you'll be providing a copy to the IRS along with this transmittal document, which is 1094C. So now if I take these this 1094C, and before I do that, there's a couple of other questions I'm going to go back over to. Okay, it would be about offering, if the employee was single, it would be 1A. Yes, so if the employee, now actually you had offered the coverage to, so here the question is, if the employee was single, would I have just put 1A, back on in that, I think we're referring to 14, the question 14. Even though it was, you've made the offer is available to anyone, so you could have, I don't think you would have had to put 1A there. Even though they're only single, you still made the offer that it was available to more than just single only. Are there any given to full-time? And let's see, are these only given to full-time employees? Yeah, so it's you're only giving it to anyone who full-time employees who are eligible that that worked at 1 full month or more. You're correct. You don't have to give them out to the part-timers or seasonal employees unless they were became eligible and were covered on the plan and were viewed as full-time for a full month or more. Okay, so coming back to 1094C. So now I'm in this transmittal document here, and let's look at some of the information that's inside of here. Most of this, if I look at 1 through, pretty much 1 through 16 is all basic employer information for the applicable large employer. You skip 17, you don't fill out anything there. Is this the authority of transmittal for the applicable large employer? So if you're not part of a controlled group, then this would be, and you would say yes. Enter the total number of 1095Cs that were submitted. You enter that total there. Is the applicable large member a member of a aggregated employer large group? So here, if I'm part of a controlled group, then I would say yes. If I'm not part of a control group, and there's more detailed sections that, to explain each of these questions. In fact, we wrote an article just recently where we went into detail about how to fill out every single one of these boxes. I will make sure that I get that over to Gary Lee and Keith, and we'll forward that out to you following this event, so you can get more details, because I'm not, for sake of our discussion today, I'm not hitting every single detail and step of the questions. Okay, so now if I come down to 25, Part 2, 22, certifications of eligibility, check all that apply. So if I've used the qualifying offer method for anyone, I would check that. If I use the qualifying offer method transitional relief, I would check that, and so on. So, and there's definitions of what each of these mean in the article that I'm going to provide you, as well as in the instructions from the IRS. So I'll let you refer to each of those to get those details, but again, you would check each of those that apply. And then the rest of this is pretty straightforward. Now you're just giving the total information. Was minimum essential coverage offered so you can check yes if 95% or more if it was offered. Now this year, there's actually, if it was offered to 70%, there's a safe harbor for that. So if it's offered to 70%, you could check that box. And then you just fill out the rest of the columns in this, and you're complete with 1095C as well here. So again, think of this like a W-2. The employer reports to the IRS on coverage with 1095C. The employer reports to the, so you give a copy to the employee, and you give a copy to the a copy of each of those to the IRS, along with the transmittal form 1094C or 1094B if you had less than 50. Okay, now these are due they're due on the 31st, actually the same time that the W-2s are due. So it makes a lot of sense. You can include them in the same mail. You could, if you're mailing them out to participants, you can mail it in the same envelope. And one of the things I wanted to mention, some of you may be part of a controlled group. So if you're part of a controlled group, you might be thinking, well, I'm only 25 employees, and I'm part of another group that has another 30. Well, if you're considered controlled group together, you would count the two together that would determine am I an applicable large employer. So you might be thinking, well, I'm only 25 employees. I'm on a fully insured plan. I don't have to worry about this. May not be the case if you're part of a controlled group. So make sure you look at the controlled group rules. There's a parent and a subsidiary rule where if the parent business owns 80% of the subsidiary, then they would count and work the groups together. If there's the brother-sister rule where they've got 5 or fewer persons that own 80% or more of the business, then you would also be part of a controlled group. Okay, so I've mentioned in terms of when reports are due. Here's another way to think of this. If you say, February 1st, they should have gone out already to all participants. Any full-time employee that's been a full-time employee for 1 month or more should go out to them. Your paper copies and forms, if you're submitting in paper copies to the IRS, you need to have sent that by February 29th. If you're doing the electronic online submittal and form filling out, you have till the March 31st to do that. If you have 250 or more employees, then you must file using the e-file, do it all online. If you're getting behind and you're having a challenge, meeting these requirements, you can file an extension. It's Form 8809, where you can get another 30 days if you need to. If you're starting on this now, you're likely not going to need that. It won't be a problem for you. So the question just came over. It says, is the pool considered to be a controlled group? My understanding, and Keith, I may refer back to you on this, my understanding is that they would not be considered a controlled group. They're just pooling together for the coverage as part of the self-insured program. It's not considered a controlled group from the sense of ownership and such. Keith, have I answered that correctly? Or is there anything else you would add in on that?
Yes, that is correct, Ken. Thank you.
Okay. Thank you,
Keith and Ken, can I add to that point as well?
Yes, please.
And that would always hold true because all of the groups that are in the pool are standalone groups, and they only get underwritten as a mass group once the board approves any subset group. So that would be correct. And but it still has to meet that partially self-funded requirement as well, Ken. So make sure you address that, okay?
And Gary Lee, can you elaborate on that for us and what you meant there, what you wanted us to address?
Well, Keith, you and I have talked about the issue of how many employees are needed to do the 1094s and 1095s, and we've seen conflicting information, which is part of the course of the Affordable Care Act. But because this is technically a partially self-funded group, meaning those credit unions in the pool, or it's also called modified, those words are used synonymously. We just want to make sure that even though, let's say, a small credit union like, I'll just say National JACL, for example, that even though they have fewer than the designated number of employees to do this, they may be required still to complete these forms.
Yes, and you're correct, and we did we've mentioned so any group that offers a partially self-funded plan, rather it doesn't matter the size of the group, they're required to complete either the 1095C or the 1095B form. And so if they have less than 50, then they would use the 1095B and 1094B forms in submitting for the self-funded. So, okay, perfect. Thank you.
Thank you.
Okay, so I had another question come over. So it says if a part-time employee is covered under our plan, do we issue a 1095? Yeah. So anyone who's covered on your plan should be issued the document. And I would think that you wouldn't be covering them unless you're, I guess technically you could have some kind of a setup, perhaps where you're offering your part-timers. But my understanding is anyone you're offering coverage to, or any full-time employee, that's been full-time for 1 month or more, that they would get this 1095C document. All right, so where do I file? Well, if you're filing electronically, it's all done online, and there's no place to send that. I'm assuming all of this group today everyone is in the state of Utah, and so this is where you would submit that, is to the Department of Treasury IRS Center in Kansas City, Missouri, I don't know why they have us send it out of state, but that is where you would be submitting the forms and documents. And as I mentioned before, I'm going to provide you with a detailed article that goes into more details on filling out each of the sections in this document, as a follow-up from our discussion here today. Now, if we want to turn an ear to this and walk away and say, well, I'm not going to do this, that could be very costly for you. It's $250 per return that's not submitted in and on time. Could be a maximum of $3 million. I don't think any of you would hit that maximum, but that could get costly if you leave it off or if you don't submit in those documents and get it taken care of. Let me wrap up our part on the ACA reporting with a few recommendations, and then I'm going to go
Can I step in there real quick,
a couple of other things. Yes, please, Keith.
Yeah. Also, the penalties are $500 per form if you willfully disregard filling out these forms.
Oh, thank you.
That's important to remember. Thank you.
Thank you. I appreciate that. So a couple of recommendations here at this point. First, we need to make sure you know what information to track. So, we've given some highlights of that. We've talked about the documents, but go into the documents themselves and make sure and compare to your existing HRIS systems or your payroll systems and say, okay, am I getting what information is tracked there already, or what am I missing? So that you make sure that you have a system in place to track that information. We talked about that eligibility. You need to make sure you have a system in place so that you're flagged when someone is eligible, or that you're looking at that, when you're looking at your measurement periods and such. Develop a process and documentation that shows who's full-time and their eligibility status. Develop a process to collect information about offers of health coverage by month. So you want to make sure, certainly anyone who's been offered participation in your medical plan, either obtain an application or obtain a waiver form from them, and make sure you've got that information. Review your ownership structures. Make sure if you've got any control group situations there that you need to take into account. Some may think they're not covered when in reality they are, and they may need to report. Discuss reporting requirements with your payroll provider or third-party administrators. You may have some options already there available to you to help you in completing these documents. Let's talk a little bit about some of those options. Certainly I would start with what's already there and what's already in place. Contact your payroll providers, if you have an existing HRIS system, CPA firm. A number of them have stepped up and are providing assistance in getting these documents complete, or may have means to track the data that you need to. If that's not working for you and you don't have options there, Keith and Gary Lee and myself, we have referral options that we can provide you with to assist you. There's options where there's a full HRIS type system in combination with reporting, the ACA reporting. There's options where they'll prepare the ACA and give it to you to distribute. There's even options where they'll do everything. They'll complete the ACA reporting, they'll distribute it for you. So there's those kinds of tools and resources available, and like I said, Gary Lee, Keith, or myself, are very happy to provide you with recommendations, along those lines. And just make sure you have systems in place that you're collecting this data, getting everything in place there. Now, I'm going to give you my contact information here, but for those who would like to stay on beyond your interest in ACA reporting, I wanted to cover just a few other important things that's going on in compliance right now to make sure that you're fully compliant with your benefit plans. So if I can assist you further with questions or anything, feel free to contact me. You've got my phone number, 801-685-8400, extension 6, or ken@hrserviceinc.com. Let me show you just a couple of other things that's going on. There's a number of audits that are taking place that, in fact, Keith can attest to this. He actually had a group that was audited up in Ogden. But they're auditing, they used to just audit retirement plans and larger organizations. They've changed now. We had a 15-person company audited a few months ago. Keith had a 40-person group that was audited. So there's a lot of audits are indeed taking place with all health and welfare plans. Keith, did you have a comment on that?
Oh, I was going to add a quick point, Ken and
Yes.
Keith. I was personally impacted by a retirement account that wasn't paid properly and it was covered in a Department of Labor audit. And what that employer was doing is they were withholding the monies from the employee's paycheck and not depositing those monies into the employee's retirement accounts until the first of the following month. So if you had a payroll deduct of that occurred on November the 2nd, they didn't put it in your account. Well, that entity was fined $15 million and was required to pay restitution. So within my household, we received a $15,000 check, which was deposited into that qualified retirement account. But
wow.
These audits are real, and trust me, the way those guys get paid, they get paid on a portion of the finder's fee or the fine that occurs. So there's no credit union that's too small that can fly under radar, in my opinion.
Yeah, thank you. Thank you. Well, it's you know, some of the things they're looking for, just to give you a little high-level view, they want they're looking for summary plan descriptions, or SPDs, or an SPD wrap document. So a summary plan description, that's for each of your benefit plans: medical, dental, life, disability. So you could create, and it's more than what you get from the insurance company. There's other missing information that needs to come with that, and they need to be distributed to all participants in the plans every 5 years if you've had changes in your plan. And then, of course, you need to give a current, accurate, new SPD or SPD wrap document to all new hires. Just clarification of the difference between an SPD and an SPD wrap. If you wanted to, the wrap document often simplifies the process, where you could create one overall plan document, one overall SPD. It wraps around each of your benefit plans: medical, dental, life, disability, and then it pulls in the missing insurance company information. And so it kind of simplifies that process. So a lot of companies are using the wrap document tools. And I know Keith and Gary Lee and myself, we all have options. The HR service actually provides that as a service. There's also various employee notices that have to go out. So you've got everything from your initial COBRA on down to summary of benefits and coverage and everything here in between. And you know, so you've got to make sure that you're getting out all of these various notices that apply to you. Some of these this list may not apply. If you don't have a wellness plan, you don't have to do a wellness program disclosure. You don't have a grandfather plan, and most of you don't have a grandfather plan, so that's not an issue. Now I've got a couple of other questions that have come over, so let me go over to that for just a moment. It says, are we registered to get detailed information, carrier, subscriber, etc., from employees who waive? I'm going to direct that back to Gary Lee and Keith. Is their question here again? I'm going to read it again. It says, are we registered to get detailed information, carrier, subscriber numbers, etc., from employees who waive?
So that's a good question. Is that applicable to the ACA reporting or the wrap documents?
I suspect that it's dealing with the ACA reporting. I didn't. I believe I went over the SPDs before that one came up.
I see. Okay. Yeah, my understanding, you've got to report just the people on the health insurance plan. Is that how you understand it too, Ken?
Yeah, and going back to, you might recall there was a section 1, 2, and 3. You only have to do 3 if you're a self-funded plan. 3, let me go back to that so you can see what that looks like. Apologize for my jumping around here, but 3 is where you've got covered individuals. And so you have to provide, you know, just those who are covered on the plan. And I believe you can get that kind of information from the providers if you don't have it already. But you can see it is a little bit more complicated. You do have to provide the name of all the individuals covered, their social security number, dates of birth. I'm hopeful that you can get that kind of information from the providers. If you may have that already from applications they filled out when completing the forms. Okay, there's another question. It says, let's see, I'm going to come over here. I think what is being asked is, if an employee declines coverage, do we need proof if they have coverage? So we do need to have, if somebody was offered coverage, they do need to be able to provide evidence that they were offered that coverage, and so I would keep that information to show that they waived. Always get a waiver form or an application from anyone who fills that out. And then there's a comment here that says, to clarify, what if an employee waives? What proof do we have to show that they do not have coverage? Okay, and I think I just mentioned that. There's also a comment here that says, this is a question for Keith. Keith, does the employee navigator have the capacity to fulfill the SPD requirement? Keith, I'll let you address that.
Yes, it does. Why don't you get a hold of me, and we will definitely look at the options available with the Employee Navigator.
Great, thank you. So coming back to, oh, go ahead.
Oh, I was going to say, and for those of you that aren't aware of Employee Navigator, that's a program offered through Encore Benefits, which is available to the credit unions in the pool.
Perfect. Thank you, Gary Lee. So I mentioned these employee notices. So make sure you have a way of getting those out. We have a tool at HR Service where we do an all-in-one, one and you're done, and it pulls in which notice applies and sends it out. So we've got that kind of a tool. Also, just a reminder for you, a lot of you may not be aware that your POP documents and flexible spending account documents may be out of date. There were changes last year, changes with the definition of spouse, changes with some new eligibility requirements that should be tied into those documents. So if your document is older than last year, you might want to talk to your provider, make sure those get up to date or replaced. This is another service we offer. We could help give you a new document if you needed that kind of thing, and I know Keith and Gary Lee have options too. So just briefly to talk about delivery of the notices and the SPDs, we need to make sure that those are getting out to participants in the plan. There's some options here. You could either mail them to individuals. If you're going to do that, you probably ought to do it first class mail. You could hand deliver the documents. If you're doing that, make sure you obtain a receipt. Or the more popular approach is to do things electronically, or you're posting to an intranet site, or you're perhaps sending out via email. So you've got all of those kinds of options here. Now, if you're doing it, if you're sending it via email, it has to go to their regular work email. Or if you're going to send it to them a personal email, you have to obtain written authorization in order to do that. And so, just keep that in mind. If it's going to an intranet site, you still have to separately send them a notification. You could mail them something or email them something directing them back to where you have these documents and such that's available. And there's some pretty hefty fines there as well if you're not doing those things. So with that, someone asked the question, what is a POP document? I apologize, I should have clarified that before. So a POP document is called a premium-only plan document. So a 125 premium-only plan document is required in order to have participants in the plan pay for some of their benefits on a pre-tax basis, like medical, dental, vision plans. Some of your voluntary products could all be paid for on a pre-tax basis if you have a 125 premium-only plan document, or if you have the full flexible spending account cafeteria plan, where you have the child care and the medical reimbursement accounts. So either of those documents allow you to do that, and so that's what the POP stands for, is premium-only plan. With that, I'm going to open it up to any other questions, and it looks like that's all the questions that have come through. We gave you my contact information just a few moments ago, and certainly feel free to reach Gary Lee or Keith as well with any other questions from there. So with that, Gary Lee, I'm going to turn it back over to you.
Okay, and then I just want to make a real powerful comment that when I've talked to credit unions about specifically the credit union healthcare pool, there tends to be some resistance because brokers don't really fully understand the concept and how it's structured and how it works. I want everyone on this call to know that as you talk to other credit unions, and I know you do, is that everything about that pool is designed to keep the existing broker relationship intact. And there seems to be some resistance to looking at the pool for that reason. So stress to the credit unions that you talk to as we continue to promote and grow the pool that we don't have any desire to displace broker relationships. So I wanted to get that comment out there. Keith, I'm going to let you do the close. And I think each and every one of you, those of you that are in the pool, thanks so much. And those that are considering the pool, thank you as well. So Keith, I'll let you do the formal close.
And Keith,
thank you very much.
Keith, and I apologize if I could interrupt you for just a second. Before we do the close, there were 2 other questions that came over. I just wanted to capture these 2. Someone asked the question, will these slides be available for the presentation? And the answer is yes. I'll provide these over to Gary Lee and Keith, and they'll distribute them around. And then also, we've recorded this. So if there's anyone else at your organization who would like to receive a copy, we'll provide this for you, and then I'll also provide you with that recording. There was also one other question that says, do you have to record new hire waiting periods? So you should have some place, and this would be something that would be recorded in your plan documents, where you would have that defined what your waiting period is, and so that should be written down somewhere. With that, thank you very much. Personally, I appreciate the opportunity to present it with you, and Keith, I'll turn it over to you.
Well, thank you, Ken. That was very informative. We appreciate the information, and hopefully this will end the stress involved with the ACA reporting at the end of the year. On behalf of the Credit Union Employees Pool and the Board of Directors, this webinar was sponsored by Gary Fisher, Encore Benefits. Please reach out to us if you have any questions at all, and we'll be happy to get you an answer. Thanks so much.